And welcome back to NTV Today. My name is Laban Cliff Onserio, and of course we continue with our outlook at this very bulletin where of course the business news comes first, and of course delving deeper into what we had earlier on, live pictures coming to you from the Jomo Kenyatta International Airport, and the Cabinet Secretary of Infrastructure, that's James Macharia, mentioning that Kenya Airways will fly directly to the United States. That's as from April of 2018. And speaking about Kenya Airways, now Kenya Airways' status as a strategic and national asset has compelled the government to hasten the process of intervention in the airline in order to facilitate a complete turnaround to profitability. The government's take in the airline is set to increase. That's following the approval by the cabinet to convert the current loan to the national carrier into equity. Now, the cabinet has prevailed upon the Cabinet Secretary of the National Treasury to seek approval from the National Assembly for the government to provide financial guarantees worth a combined 75 billion shillings to lending institutions. The guarantees will help unlock future financing for the airline in order to execute a full turnaround of its fortunes. Now, the airline recently took on a new board as a new CEO. Of course, we'll delve a bit deeper on that matters airline, and of course looking at the recent Qatari issue, of course, with several Emirati states, of course, just pulling out of support to Emirates. We'll have our analyst Jibran in studio to discuss that. But of course, further afield, looking at the Oman Trading International, that's OTI, which is set to be a minority shareholder in Hass Petroleum Group. The Singapore-based company will own 40% of Hass Petroleum in a deal that will see the local company expand into various markets into the Eastern, Central and Horn of Africa. OTI will support Hass working capital to boost its competitiveness. Hass Petroleum is also set to have an upper hand in the open tender system where local oil marketers bid for barrels of oil to sell. It's not clear for how much OTI paid for the shares in Hass Petroleum. Now, the deal was sealed by London-based Standard Advisory Limited and KPMG East Africa. OTI also operates in the Middle East, and its investment to Africa is expected to cushion the company from political shocks such as the sanctions against Qatar. That's an oil-producing and exporting country that's OPEC member. And of course, the dominance debate on the telecommunication industry is not over yet, with the Telecom Kenya chairman saying they look to the government and the industry regulator to come up with market intervention mechanisms to level the playing field. The telco has dropped the orange brand and adopted Telecom as part of a larger strategy to sharpen its competitive edge. Udhaifa Aden brings us the story.
The confetti came down, and with it came the curtains for the orange brand and colors in Kenya's telecommunication sector. Telecom Kenya is now trading as Telecom, and the rebranding is backed by a new strategy that focuses on infrastructure and data service expansion.
We were the sleeping giant. But in the last 12 months, we have worked really hard to turn around the business, make it more efficient, and prepare it for the future.
In an effort to tap into the growing data usage on various platforms, the firm has introduced free access to WhatsApp that will last for the relaunch period.
We will be unveiling a number of aggressive data offerings over the coming weeks. As a start, these are the products which will be available from today during our launch. We'll offer free WhatsApp.
Amid all the pomp, promise and celebration lies the discomfort of most sector players. Dominance. Telecom is looking to the government to check Safaricom's dominance in the market in order to ensure fair competition, which will hopefully allow the telco to step into profitability in a market that has only one firm enjoying profits.
There is need for scrutiny and consideration in the sector in order to ensure fair competition. Because the question we ask is, how can investors get a return where a market is skewed?
A draft report on competition in the telecommunications sector, which was commissioned by the Communication Authority, suggested splitting M-Pesa from Safaricom if the industry does not achieve seamless cross-network mobile money transfers by the end of the year. The chairman maintains that the market as it is today favors the big player to the disadvantage of the smaller players, which will in turn inhibit the growth of the industry.
The market will not survive in the long term unless a robust policy mechanism is put in place to ensure healthy competition and overall sector development and growth by way of further investments.
We as government in our policy want to make sure we're going to have competition in the market. The study has come, but even before the study, we agreed with all the operators. We sat in the room and decided what was the top priority that we needed to deal with. Mobile money interoperability was the first, and we had even a meeting yesterday. So we hope that by the end of July, we can actually have that already in place.
As these battles continue, the next one to take its seat in the arena is the price war, as Telecom promises what it terms as the most competitive rates in the country. Hudhaifa Aden, NTV.
And of course, just looking at live pictures from the Jomo Kenyatta International Airport, where the Cabinet Secretary of Infrastructure is taking a tour of the new terminal, and of course, just looking at the security measures that have been put in place right now. And of course, there you see a background pictures. This is what you don't get to see anytime you're at Jomo Kenyatta International Airport, because you're looking at the computers and know exactly what the staff actually look out for in your luggage as you check in to the different terminal outlook onto that. Of course, we'll be staying at Nation Center and of course at Jomo Kenyatta International Airport to bring you up to speed with what is taking place there. Our reporter Alex Mwangi is on the ground, and as soon as we get a hold of him, we'll have a conversation just to get a deeper insights onto why exactly the CS is quite interested in ensuring that JKI expands and keeps its number one position as a number one top airport in East Africa. So I'm going to cross over to Jibran right now. Jibran Qureishi is a regional economist at Stanbic Bank, just to get away a few issues on board. What's standing out for you? And quickly, I just want to mention about, of course, we're looking at the entry of the HAS, that's as Consult, of course, they signed up a deal. There's also now the Qatar, the 4 states. And this is actually a company that's based in the United Arab Emirates. Looking at Qatar, 4 states actually severe ties with Saudi Arabia. Qatar is basically going through turmoil. It's an oil-producing country. The prices of oil. So what's this going to impact in the country? Because here you're seeing an increased investment into the country through Has Consult, but at the same time, an OPEC country is facing turmoil.
So it's been no secret that, we as a Kenyan economy has benefited from lower international oil prices. Now, of course, after the recent diplomatic row between Saudi and 4 other countries with Qatar cutting off ties, there was this view that perhaps the OPEC agreement that was made at the end of May in Vienna, could be at risk of collapsing. And of course, OPEC is deciding to extend production cuts, which would theoretically mean that prices could start rising. But I think we have seen some remarks from certain policymakers within Qatar saying they may still, adhere to the OPEC cuts. In terms of the significance of Qatar in the oil market, it is a notable producer. It's not as big as Saudi Arabia. But I think generally, in our view at Stanbic, we still expect oil prices to continue to meander sideways. And I think the risk for the Kenyan economy from higher oil prices is not a prominent one in 2017.
Mm-hmm. Well, I think I have to just sit up straight because, of course, speaking to an economist, what does meander sideways actually mean? Because I'm looking at an opportunity here in Africa. We're getting a lot, of course, importing a lot of oil from the OPEC countries. What will this entirely mean to the region, especially with the turmoil that's currently going on in Qatar?
So I think when you look at what's happening currently, I think as East African economies, we're about to become oil exporters. Kenya, Uganda, and of course, Qatar is one of the world's largest natural gas producers. So Tanzania is obviously watching out those developments closely there as well. But I think when we look at the narrative, we should make sure that we benefit from that narrative today. We're not net oil exporters; we're net oil importers. We are going to become net oil exporters. But what we need to ensure as East African economies is to underpin our resilience. We need to ensure that we remain a diversified economy. We don't start, mortgaging, oil because we're going to get excited by oil down the road. So we start making, poor policy decisions today. So I think stable oil prices in a range between 50 and 60 means we are going to have potentially lower fuel prices, but obviously the downside to that is there could be a lot more traffic on the road, but that could change with the SGR.
All right. True, and you mentioned the SGR, and you mentioned that our reporter Dan Wong is actually on that trade ride. And just your sentiments on that before we come into infrastructure. So if you're speaking about that oil, being an oil importer, net oil importer in the country, I'm just looking at future forward. Even now with, say for instance, local companies such as Haas partnering with, UAE-based companies. Does that kind of spell some brighter days ahead, especially for the oil industry? Looking at this is actually a Kenyan company, and looking at a UAE company coming to invest in Kenya through them.
Absolutely. As I said earlier, I think there's a growing consensus that East Africa is a place to invest. Other large parts of Sub-Saharan Africa are not looking very rosy, and I think I don't see this changing anytime soon. Obviously, the narrative around growth is going to be more on the energy and mineral side over the next 10 years, arguably. But I think when you look at the success stories over the last 5 to 10 years, which is perhaps compelling a lot of these UAE firms to start investing in Kenya, it's really been positive stories on construction, telecommunications, and of course, prior to the interest rate cap, financial services as well.
All right, great. Wow, a lot more to talk about. Let's look at the infrastructure now. We look at JK, of course, we've been live at Jomo Kenyatta International Airport looking at kind of the investor sentiment around it, a lot more infrastructure shaping up in the country, and the standard gauge rail line with the Madaraka Express being launched. Are we taking on too much as a country? And of course, right now, what is glaring is, we have to pay up the loan we got from the African Exim Bank, or from the Chinese Exim Bank, I beg your pardon.
So the positive side of what's happening is that we are, number one, spending on infrastructure, which is what we need to create jobs and support businesses. The thing that gets people quite worried, and obviously the critics of all this development, is that we are accumulating a lot of debt. But I think when we look at debt, let's look at it in different ways. We are taking up concessional loans. So the SGR was on a concessional loans. Obviously, as total debt within the country, we are taking up a lot more commercial loans, which means we have a shorter repayment period. When you look at some of these large infrastructure projects that we are funding through external debt, if you do get it on concessional basis, you have, on average 15 years to pay it, you have very low interest rates. So of course you hope that over time these investments are going to start yielding economic dividends, and hopefully, over the medium to long term, you can, justify spending all that money on these projects. So that is the view that a lot of people will definitely take. But I think when you look at the investments in infrastructure, construction has been an important part of supporting GDP growth, economic growth in Kenya, I'd say over the last 5 to 7 years. But that's been because of the investment spending on the railway, bringing in the locomotives and that kind of, development. But I think now the narrative and the dynamic has to shift. We need to ensure that we move more goods, we create more factories, and of course we create a lot more jobs for Kenyans.
Of course, the question has been the multiplier effect. So how do you actually calculate the multiplier effect of such an investment? And people are saying, don't look at now, but look at the future of how the SGR is going to benefit the region.
My view is, I think, I know there's a, people expect, perhaps a lot of policymakers expect the railway to add about 1.5 percentage points to GDP. But I think that will only be possible if we eventually connect it to Malaba, the border in Uganda. So Uganda is our largest trading partner within the COMESA. So I think the multiplier impact that you're talking about will only be more tangible once we connect it to Uganda, so we can benefit from these synergies of regional integration. I think in the interim, as we've got it from Mombasa to Nairobi, and hopefully over the coming year closer to Naivasha, we hope that this will perhaps lead to a lowering of the cost of doing business. But the reality is that if you want corporates and firms and manufacturers to use it, you need to ensure that it's efficient infrastructure.
Yeah. Great. And Jibran, before I let you go, I just want to get your views on the interest rate caps or the private sector, and of course, tying that with your report, just saying that the Kenya private sector kind of stagnates in the month of May in terms of the growth outlook forward.
Yeah, so just very quickly to recall, Laban. So Stanbic Bank launched the PMI index, which is short for Purchasing Managers Index. So we look at purchasing activity on a monthly basis within the Kenyan private sector, and we survey about 400 companies, both in the formal and informal sector. So what we're seeing is that a number below 50 denotes a contraction, and a number above 50 is an expansion. So for the first 5 months of this year, we've seen the lowest average since data collection began, which actually indicates to us that there's some strain that the private sector is feeling. And
particularly on the financial sector, maybe?
Absolutely. So one of the biggest constraints that they are feeling is financial constraints. And I think the lack of access to credit is one of the biggest problems. So
where do you think this debate will go? Because when we had the central bank governor also commenting on the same and saying that this is actually straining the banks in terms of the profitability.
So I think, unfortunately, the intended consequences of the interest rate regulation is not having, is not working. And I think, unfortunately, if nothing is changed around that, it's going to lead to an environment where commercial banks are unable to price for risk. So they're simply not going to take risk. They're not going to be lending a lot of money. And they're going to typically do what they're already doing. They're going to be investing their money in government treasury bills and treasury bonds. That crowds out the private sector. And I think, hopefully, we hold the hope that I think over the coming year, perhaps, there will be some reforms around that regulation that will perhaps start leading to an improvement in the credit access situation within the economy.
All right, Jibran, just before I let you go, it's an election year. The world is watching Kenya. The dollar is now trading at 103. What's your bet as you go towards the election? I said 110, but you seem to have a different view.
Yeah, so I mean, on the currency front, I think obviously people get very emotional when you talk about the currency in Kenya. But I think when I look at the currency and I look at the balance of payments dynamics, I agree that because we are going to be importing a lot more food over the coming months, and of course we're exporting a lot less tea because of the drought, there's a fundamental bias for the currency to weaken. But I think globally the strength of the dollar is starting to subside. And I think courtesy of the external loans that the Kenyan government got early in the year, that has boosted FX reserves. So I think obviously when FX reserves have risen quite high, the regulator remains committed and willing to sell dollars into the market should the currency become disorderly. So I think I don't like giving levels, but I'm definitely more optimistic than your view.
Oh my God, at what? Just what point? If not 103, what would you go for?
I'd say slightly higher than that, but lower than 110.
All right, we'll leave it at that. Jibran Qureishi, thank you so much for speaking with us. That has been Jibran Qureishi, who's the regional economist at Stanbic Bank, just speaking matters economy from where he sits, of course, just looking at the economical outlook in the region at large. But before we get Dan Mwangi, of course, we had a conversation about the standard gauge railway line, how the infrastructural impact on the country, the multiplier effect, and of course, is Kenya taking on too much? Because remember, we financed 90% of this project through the China Exim Bank. And of course, just before we get Dan Mwangi, let's just take a look at what do the Chinese say? What do the Chinese feel that Kenyans should learn from the country? Because we're looking at a lot of business relations to deal with the Chinese, and Kenyan entrepreneurs have been challenged to learn from their Chinese counterparts in skills, knowledge transfer and business ethics. Now, trade balance is in favor of China, but the Kenya Chamber of Commerce says that that should not be a deterrent factor to those willing to do business in the East. Now, these were part of the remarks made when the China-Kenya Business Week dates were announced. Now, that's set to take place on the 29th of June. That's later this month to the 1st of July. Take a listen.
China Trade Week was the first China-focused event to be hosted in the East African region. It successfully provided exhibitors, visitors and various stakeholders with the opportunity to meet together to develop trade relations and potentially negotiate commercial cooperation with Chinese manufacturers.
We are now telling the Chinese, yes, you have the technical know-how, you have the skills that we require to develop this country, but can we now start looking at skills transfer, knowledge sharing, so that then we start realistically empowering the Kenyans.